All right, so it seems like a lot of you are really interested in the Federal Reserve.
Yeah, it's a pretty hot topic these days.
It is, and for good reason. I mean, it seems like everyone's trying to figure out, you know,
Like what they actually do.
exactly what does this organization actually do? And do their decisions actually, affect everyday people like us?
Right, like how does it trickle down?
Exactly. So to help us on this deep dive, we're going to be looking closely at The Lords of Easy Money by Christopher Leonard.
Oh yeah, great book.
Have you read it?
I have, yeah. It's a fascinating look into the Fed, and it makes a pretty bold claim
Which is,
that the Fed's policies have actually broken the American economy.
wow, that's a pretty big statement.
It is, but the book makes a compelling case.
So how does it do that?
Well, one of the things that makes this book so interesting is that it doesn't just throw around, all this complicated economic jargon.
Right.
Instead, it focuses on the people at the Fed.
Oh, interesting.
Yeah, their personalities, their backgrounds, their disagreements, and it really brings this powerful institution to life.
So it's like a human story.
Exactly. It makes
Yeah.
it much more relatable.
I like that. So who are some of these people that we meet in the book?
Well, the book spends a lot of time on Tom Hoenig. He was the president of the Kansas City Fed,
Okay.
and he had a vote on the Federal Open Market Committee, which is the FOMC, the group that sets interest rates.
Right. The people who decide whether interest rates go up or down.
Exactly. And Honig's story is really fascinating. He started out working in his family's plumbing shop.
Oh, wow.
Then he served in Vietnam.
So he had a pretty unique path to a career in economics.
Yeah, you don't get more Main Street than that.
Right.
And he brought that grounded perspective to the Fed.
Mhm.
He was known for being a real stickler for the rules, very cautious and always concerned about inflation.
Which makes his dissent against the Fed's policies in 2010 even more striking.
Oh, absolutely. I mean, this guy voted no on the Fed's decisions 6 times in a row.
Wow, he must have been really concerned.
He was deeply worried about the Fed's response to the 2008 financial crisis.
Can you remind me, what was the Fed doing back then?
So basically, they were trying to prevent a total economic collapse.
Right, because things were really bad.
Things were really bad. They slashed interest rates to almost zero and started pumping money into the economy through something called quantitative easing, or QE.
Right, QE. That's one of those terms that you hear a lot, but I'm not sure everyone really understands it. Can you break it down for us?
Sure, imagine the Fed as this giant money-creating machine.
Okay.
With QE, they basically create new money out of thin air and use it to buy assets, mostly government bonds from banks.
Okay.
This floods the financial system with cash and is supposed to encourage lending and investment.
So the idea is that this will help boost the economy when traditional methods like lowering interest rates aren't enough.
Exactly, it's like a last resort kind of thing.
I see. So Hoenig was basically saying, hold on, this is dangerous.
Right.
Yeah.
He was a hawk through and through. He thought all this easy money would lead to all sorts of unintended consequences.
Like what?
Like asset bubbles, for example.
Asset bubbles.
Yeah, where the prices of things like stocks and real estate get inflated beyond reason. Like what we saw with the housing market before the 2008 crash.
Right.
He was also worried about the long-term effects of keeping interest rates so low for so long.
So he thought the Fed was playing with fire.
He saw it as a deal with the devil, a short-term fix that would create bigger problems down the road.
And was he alone in thinking this?
He wasn't entirely alone. There were others at the Fed who shared his concerns, but they were definitely in the minority.
So you had this real clash of viewpoints within the Fed.
Oh, absolutely. There was a lot of tension.
I can imagine. It makes you wonder how much dissent is allowed within an institution like the Fed.
Yeah.
I mean, they're supposed to be independent, right?
They are.
But if everyone's just going along with the party line, are they really making the best decisions?
That's a great question, and it's something that the book really explores.
Yeah, it seems like you need those dissenting voices to, challenge assumptions and point out potential risks.
Yes, exactly. Otherwise, you end up in an echo chamber, and that's never a good thing.
Okay, so we've got this clash of viewpoints within the Fed. But how did these policies actually play out in the real world?
Right. How did it affect people like us?
Did those bubbles that Hoenig was worried about actually form?
Well, let's look at what happened after 2008. All that money that the Fed pumped into the system had to go somewhere.
Right, didn't just disappear.
Exactly, and it went into some interesting places.
So where did he go?
One place was corporate debt companies were able to borrow money at super low interest rates.
Okay.
So they started taking on more and more debt.
Wait, so the Fed's actions actually encouraged companies to take on more debt?
Yeah, pretty much.
That sounds a little risky.
It can be, and the book uses this company Rexnord as a case study for what can happen when easy money meets corporate greed.
Rexnord, what do they do?
They're a manufacturing company. They make things like ball bearings and industrial chains, like really essential stuff.
Hmm.
And they were able to take advantage of these low interest rates to borrow a ton of money.
Got it.
But instead of investing that money in their business or their workers,
Right.
they used it for things like stock buybacks, which boost share prices and benefit executives and shareholders.
So they're basically just using this cheap money to make themselves richer.
In a way, yeah. And they also used it to move jobs overseas.
Hold on, so they're using cheap money to ship jobs overseas?
That's right.
That doesn't sound like it's helping the average American worker.
It's not. And the Lords of Easy Money really highlights the human cost of these decisions. It tells the story of this guy, John Feltner, who worked at a Rexnord ball bearings plant in Indianapolis for almost 40 years.
Wow.
And he lost his job when the company decided to move production to Mexico.
That's heartbreaking. This guy dedicated his life to this company, and then they just, pull the rug out from under him because they can make a few extra bucks by moving his job to another country.
It's a tough story, and it wasn't just Rexnord. The book argues that this pattern played out across the economy.
So even if the Fed's intentions were good, to prevent a recession and help the economy recover,
Right.
the reality is that their actions had all these unintended consequences.
Exactly. And it raises this question of winners and losers.
Right? Like, who's really benefiting from all of this?
Who benefits the most from the Fed's policies? Is it really the average person on Main Street? Or is it the wealthy investors and corporations who are already doing pretty well?
That's a really good question. So we've got the 2008 crisis, the Fed's response, and then this story of Rexnord, which seems to represent this broader trend.
Right.
But the book doesn't stop there, does it?
Oh, no, not even close. It goes on to talk about how easy money flooded into other sectors, like the fracking industry and commercial real estate.
Okay.
And guess what? It fueled even more risky behavior and inflated asset prices.
You've lost me a little bit. What's so risky about commercial real estate? I mean, it's just buildings and offices, right?
Right. Well, think about it this way. If a company can borrow money really cheaply, they might be tempted to take out huge loans to build these massive office towers or shopping malls.
Okay. I see where you're going with this.
But what happens if the economy slows down and those buildings stay empty?
Right. No one's renting them.
Exactly. Suddenly you've got a lot of companies and investors sitting on a mountain of debt they can't repay.
So it's like a domino effect. Easy money encourages excessive risk-taking, which can create these vulnerabilities in the system. And if one domino falls, it can trigger a chain reaction.
Exactly. And the Lords of Easy Money argues that this is exactly what happened in 2019 with the repo market crisis.
Okay, repo market. I'm not sure I've ever even heard of that. What is it?
It's kind of like an overnight lending market for banks. It's where they go to borrow money from each other to meet their short-term funding needs.
Okay.
It's super important for keeping the whole financial system running smoothly.
So it's like the plumbing of the financial system.
Exactly.
But what does it have to do with the Fed?
Well, in September 2019, this market basically froze up. Banks suddenly became reluctant to lend to each other, and interest rates on these overnight loans spiked.
Wait, why would banks suddenly stop lending to each other? That sounds scary.
It was scary, and ironically, one of the contributing factors was the Fed's own actions.
Oh, so?
Years of quantitative easing had flooded the system with reserves, which are basically the funds that banks hold at the Fed. This changed the dynamics of the repo market and made it more vulnerable to disruptions.
So the very policies that were supposed to make the financial system safer actually ended up making it more fragile.
That's one of the key arguments that the book is making. It's saying that the Fed's interventions, while well-intentioned, can create these unintended consequences and distort markets in ways that we don't fully understand.
So what happened next? Did the Fed have to step in to fix the repo market?
They did. They had to launch this massive repo loan operation to inject liquidity back into the market and prevent a full-blown financial crisis.
Wow, so the Fed had to come to the rescue again. It sounds like they're constantly having to put out fires that their own policies might have helped to start.
Yeah, it's a bit of a vicious cycle. And what's even crazier is that this happened just as the Fed was trying to normalize its policies, start raising interest rates and shrinking its balance sheet.
So they were trying to wean the economy off this easy money, and the system basically threw a tantrum.
Pretty much it showed just how addicted the financial system had become to the Fed's support.
So we've got the 2008 crisis, the story of Rexnord, and then this repo market crisis in 2019. It seems like the Fed is always in reactive mode, responding to one crisis after another.
And it becomes even more apparent when we look at what happened during the COVID-19 pandemic.
Yeah, so 2008, the repo market in 2019, things were not exactly calm even before the pandemic hit. So what happened when COVID threw everything into chaos? What did the Fed do?
Well, their response to the pandemic was unlike anything we'd ever seen.
Really?
They slashed interest rates back down to zero, launched a massive new round of quantitative easing, and they created all these emergency lending programs
What were those for?
to prop up businesses and markets. We're talking trillions of dollars being pumped into the economy.
Trillions. It's hard to even wrap your head around a number that big.
It is.
And they were working with the Treasury Department, right?
That's right. They basically joined forces to try and prevent a complete financial meltdown. And to be fair, they probably succeeded in that goal. I mean, their actions did a lot to stabilize things.
But were there still winners and losers?
Oh, absolutely.
Like, I remember the stock market doing really well, even though a lot of people were struggling.
Exactly. The book points out this really stark contrast. While millions of Americans were losing their jobs and facing real economic hardship, those who owned assets like stocks and real estate actually saw their wealth increase.
So the Fed's policies, while intended to help everyone, might have actually made the gap between the rich and poor even wider.
That's what the Lords of Easy Money argues. It highlights how these actions can have unintended consequences. And those consequences often fall hardest on those who are already most vulnerable.
So what's the big takeaway from all of this? Are the Fed's policies ultimately helping or hurting the average person?
That's the million-dollar question, and there's no easy answer.
It just seems like every time they step in to fix one problem, they create another one down the line. Like they're stuck in this loop of interventions.
Yeah, and the book makes you think about the long-term sustainability of all of this. Can we keep kicking the can down the road forever? At some point, don't we have to face the music and deal with the underlying issues?
It also makes you think about the power dynamics here. I mean, the Fed is this unelected body, but they have so much influence over our lives. Is that really the best system?
It's one of the key questions the book raises, this issue of accountability. Who is the Fed really accountable to? Are they truly acting in the best interests of all Americans, or are they more beholden to Wall Street and the financial elite?
One thing that really struck me was the story of Tom Hoenig. It seemed like he was trying to sound the alarm, but no one was really listening.
Yeah, it's an interesting case.
Do you think his warnings were justified?
It's hard to say for sure, but a lot of his predictions do seem to be coming true. I mean, he warned about inflation, and now we're seeing inflation at levels we haven't seen in decades. He also warned about asset bubbles, and we've seen those too, and everything from tech stocks to housing.
So maybe we need more people like Hoenig in positions of power, people who are willing to challenge the status quo and speak truth to power, even if it means being unpopular.
I think that's a great point. We need more diversity of thought, more dissenting voices in these institutions that have so much influence over our lives.
Well, the Lords of Easy Money has definitely given us a lot to think about. It's a complex topic, but one that everyone should be aware of. I mean, the Fed's decisions affect all of us, whether we realize it or not.
Absolutely. And I think the book does a great job of making these issues accessible and relatable. It's not just dry theory. It's about real people's lives and how they're affected by the decisions made by those in power.
So if you're interested in learning more about the Fed and how it works, I highly recommend checking out The Lords of Easy Money. It's a fascinating read that will challenge your assumptions and leave you with a lot to ponder.
And we hope you'll join us next time for another deep dive into a complex and timely topic.